Crypto Hotep here with another investing video. We're on week 59 of the Family Portfolio and Dividends Tracker. If you're unfamiliar with these videos, feel free to go to my channel and go to week number 1. It's kind of where all the magic began. In that video, actually, I list out and I show what the methodology was behind this, the reason why I'm doing it, and how I'm doing this. So just to give you a quick little snapshot here and synopsis, I made a short list of stocks for my family to choose from based on my own research, mostly established companies, large caps, and dividend stocks, as well as some growth stocks. And I had them pick their companies that most resonated with them. We then proceeded to use M1 Finance as our broker of choice, because with M1 Finance, and you'll see the technology, it provides a way where you can create a big portfolio and then sub portfolios in it. So every one of my family members has a portfolio of his or her own stock choosing. And every week we go through this portfolio, we go through market updates, news, anything going on with the markets, and just overall charting our investment journey and showcasing what you can do to help generate wealth brick by brick, little by little. By no means is this financial advice at all. Feel free to do your due diligence before you invest in any stocks. But with that being said, guys, before we go to week 59, we take a look back at week 58. 58 saw our balance at $22.04, so we hit over $2,200 in our balance. Weighted rate of return year to date of 4.94%. Market gain of a negative $103, or I should say a negative 4.94%. Market gain of a negative $103.19. Dividends earned of $6.69. So what did this week hold? Well, this week we have our balance at $22.0635, so not a big jump here. Our year-to-date return went down a little bit more, negative 5.47%. Market gain of a negative $115.06. Dividends earned of $7.08. So what actually happened? What's going on here? So between this week and last week here, we had a little bit going on here, which is a good thing. So we had a little bit of dividend activity. We received 4 cents from Lowe's, and then we received 4 cents from Deere and Company, such as John Deere. We also had our bi-weekly deposit of $15, and we had 5 buys here. So 5 buys we bought some Google, some Vici, Sony, more than likely that's for the kids, Apple, love the dip on Apple right now, and then some more Google. We're loving the Google dip. Okay, so those are the 5 buys that we had. And as I mentioned before, guys, if this is your first time watching the video, and you're probably thinking like $15, like what is that going to do? Well, if you look at the portfolio balance here, it's $2,200. If we go and zoom out and go from a year until now, we started these balance. We started back in February of 2024, and that was around 250, I believe around 250, 300 balance, and we steadily increased that month over month, and this portfolio has grown over time. So yeah, it's only $15, and you can obviously do more, but we want to showcase that you can generate wealth that way. It is a slower process, so it's not an overnight thing, but it can be done, and it just takes patience. Okay, so let's go back to year to date here, and we go to bottom to top. From bottom to top here, unfortunately my wife's at the bottom this week, and my wife's balance is $214.91. Money weighted rate of return of a negative 3.24%. Market gain of a negative $5.87. Dividends earned of 46 cents here. So very similar to last week. Celsius is holding up the portfolio nicely, up over 38% now with Celsius. Pepsi is at a 52-week low currently, down over 14% year to date. Tesla trying to close the gap on Tesla currently. So we're at 20.82% in the negative. But if you've been following, last week we were around 30%. So we're closing that gap. And that's how Tesla runs. Tesla runs very fast. Very fast. You could be up and you could be down. And right now we're looking at a reversal right here, hopefully. Google down over 20% on Google. And that's actually an opportunity, if you can understand that. There are some times where these companies, these very good established companies, they are undervalued. And I believe Google right now is very undervalued. They smashed their earnings. They're doing fantastic business wise. Their financials are good. The price isn't where it needs to be right now. There was a little FUD and a little news that came out that Apple may be abandoning the Google search in lieu of AI. So maybe they're using their own AI product in the iPhone instead of the Google search. That could be a major blow, but again, it's Google. I believe Google will figure this out in some form or fashion here. So if we go to our middle stock, our middle's balance is 237 and 62 cents. Money weighted rate of return of a negative 9.79%. Market gain of negative $20.96. Dividends earned of 66 cents. Again, similar to last week, similar to the week before that, and the month before that. Costco is still going to Costco. No matter if there's recession fears, no matter if there's tariff fears, no matter what anybody says, Costco will still Costco. Amazon, another undervalued tech stock. Amazon ain't going anywhere. It's not. Not at all. No matter how much the subscription increases for people, people are still going to use Amazon because of its value that they pose to the consumer. And the value is to get those products within 24 hours, very quickly, very easily. Target, another one, down over 27%. Starbucks down over 11%. Tesla, again, closing that gap, down over 24%. And then Google is up over 3.5% here. And then Sony's still up in the double digits for Sony. Okay. Let's go to our youngest. Our youngest has a balance of 278.91. Year to date of a negative 4.77% return. Year to date, market gain of negative $11.77. And then dividends earned of 40 cents. So what's going on here? So again, pointing out Costco, right? The great player of Costco is still holding its own here. Sony's still holding its own here. And then Apple down over 20% in Apple, but we bought that dip. Starbucks down over 12%. And then Tesla, again, we said it, closing the gap. Okay, let's go to our oldest stocks here. Our oldest stock, balance of 731.50. Money weighted rate of return of a negative $9.51%. Market gain of a negative $68.83. Dividends earned of $1.61. So very similar. Costco, common player in our family, positive. McDonald's also positive. Again, recessions, you have to have defensive stocks when the economy goes down. The reason being is, case in point right here, you don't want all your stocks, particularly in maybe higher volatility growth tech stocks. You do want some of your stocks in defensive stocks that can handle that volatility of the market. McDonald's being one of them, and a lot of people wouldn't think that, but just from a economics perspective, you just think about it, people are more prone to go to McDonald's, save money versus maybe going to a sit-down restaurant, get something very quick, easy, and they have the value menu. So, all of that plays into the economy as well. And then Tesla, again, closing the gap on Tesla. Okay, and then my stocks here, my balance is $743.40. Year-to-date rated rate of return 0.56%. So close to being green here. Market gain of a negative $7.64. Dividends earned of $3.95. So um, you know, kind of like Groundhog's Day as of right now. And this is usually the hard time with investing, is when you get stuck in kind of this rut where there's bearish conditions, meaning that price is going down on your stocks week after week after week, and you're kind of stuck in this same spot where you're still buying, you're still putting money in the markets, the prices are still going down, or maybe they're just kind of ranging, right? Go up a little bit, down a little bit, up a little bit, down a little bit. But guess what? That's investing. Warren Buffett actually, he had his annual Berkshire Hathaway conference this past weekend where he announced his retirement. And he did kind of tap, I believe it was Greg Abel, as the next Warren Buffett, if you will, to take over Berkshire Hathaway. But when he was asked about the tariffs, about the volatility, he had a very good answer. And Warren Buffett's answer was, that's investing. That's just the name of the game in investing. It's nothing. He literally said it's nothing. Because it's not. It's just turbulence before you get to the smooth skies here. So with that being said, technology down over 11% as of right now. Finance is up over 3%. And with finance, I did add, in lieu of the GOAT, Warren Buffett here, I did add Berkshire Hathaway to my finance sector here. So I will be adding money into the Berkshire Hathaway and getting a position in there. But I feel as though it was right. Warren Buffett did leave Berkshire Hathaway in a very, very good spot. He left Greg Abel, who was going to take over, in a very good spot with a bunch of cash. And remember, guys, when we talked about this before, Warren Buffett was sitting on a tremendous amount of cash, and it was for a succession plan, and that's how succession plans work. And it was really refreshing to see that, and him kind of formally announce, his retirement. Industrials and energy up over 5% here. Consumer and staples are down over 3.25% here, year to date. So Procter and Gamble, Lowe's, Target dragging it down, Church and Dwight, Kraft Heinz, and then Kimberly-Clark, where I just added that new position, down a little bit over 1%. But TJ Maxx holding strong. Kroger holding really strong. Again, Kroger very similar to Costco here, with that consistency. And restaurants and food here, the GOAT's still going to GOAT here. The GOAT is Coca-Cola, up over 15% year to date on Coca-Cola. Hershey up over 3% on Hershey, and I did a little analysis on Hershey as well. McDonald's, again, near that 9%. Domino's up over 14% on Domino's. Kind of the one standing out here, Starbucks. Starbucks down over 9%, but I think Starbucks will be changing around here. Real estate, again, we did get a little position, start a little position in Vici. Again, it wasn't a lot because we were using some of that money from the $15 deposit, and we dispersed that amongst everybody. So we divide that 15 up. We chop that up between the 5 of us. Federal Realty actually reported their earnings, and they actually did really well. They smashed their earnings, which was good. Realty doing what they do normally, and then Public Storage. You can't go wrong with Public Storage here. So, and then crazy, the growth stocks here. Palantir smashed earnings this week as well. MicroStrategy just going crazy. Bitcoin is over 100K, so you already know this is going to go crazy. CrowdStrike, and then we already talked about Tesla here. So with that being said, guys, the balance ending on week 59, 2206.35, money weighted rate of return of negative 5.47%, market gain of a negative $115.06, dividends earned of $7.08. If this video was helpful, feel free to like, subscribe, comment, guys. Let me know what you think. But definitely comment to help the algorithm. But as always, guys, thank you and happy investing.